Since the financial crisis, profits have diminished into nothing as interest rates turn negative. Corporate profits are the most important driving force for any institution, and in this difficult time, increasing risk has been the name of the game. Undeniably, this was the cause of the financial crisis, but let's overlook that and instead multiply that risk into the wonderful world of derivatives, where rainbows shine and flowers grow. You came here for the truth, so let me unveil that for you. Let's look at what banks are turning to today in order to increase their profits. Let's look beginning with this. It wasn't just Deutsche Bank that was grappling with big questions about the future at the IMF meetings. The German bank is scrambling to overhaul its operations. It's facing a multi-billion-dollar fine. And why? For selling toxic mortgage-backed securities. Okay, these MBS are derivatives. And I'll show you a diagram about that in a moment. Many other in the banking industry are still figuring out what they should be doing nearly a decade after the financial crisis. So here we are claiming on one end, everything is just fine. Actually, if I'm not mistaken, I think it's this article that actually says further down, says the banking, it was Goldman Sachs who said it, of course, that the US banking industry has never been more safe. And that's when you know you need to jump ship. Not jump ship from investments in banks, for example. Not investments in the stock market. Anything interconnected to these markets is going to fail, or certainly could fail. This new world of low interest rates and even negative interest rates is something that is very difficult as a game changer, not just for banks, but for the whole financial industry. Very important to note, what has happened is something that has never happened before. So you can't really use a historical sense to discuss what could happen with these negative interest rates. And surely as the world turns to it, globally, we have such a wide-scale issue that the banks, they can't be tested. They can't be stress tested in order to determine if they will survive this calamity. Because, of course, we have nothing to go on. Moving on, as you look at this. These are derivatives. This happens to be the Canadian bank derivatives. As you see, the top 5 banks and their derivative holdings. Now, Canada, let me just show you right here. There's Canada. There I am, the dot, showing you geographically. But let's look at the financial industry. And Canada's rather small when compared to a nation like the US. But even this will show you that they have $32 trillion in derivatives on their books. Just the top 5 banks. This goes far beyond what they're capable of dealing with. There is no way that they could ever pay this back. They cannot be bailed out. They cannot be bailed in. There's no going back from this. It can only go up from here. And I've done videos about it in the past, in my early videos many years ago, where I talked about the derivatives in Canada, and they were significantly less. Yet, here we are today, expanding on that. Why? Because they can create assets, they call them assets, out of thin air. There actually doesn't even need to be an underlying physical asset of any kind or even a paper asset. They literally can just create something, give it a value, and then share it on the market and make a lot of profit from it. And that is where we have turned to in the markets today. A lot of those in the financial industry, mainstream, will not cover it. And most, I would say, over 90%, if not more, of the alternative news will refuse to mention it. Why? Because it's clouded in a lot of mystery. I'm here to demystify that for you right here in a very simple diagram. I wrote this for my book, this diagram, and it's very simple. This is exactly what it is. I've made it into a cartoon because it's that simple that it can be explained exactly like this. And this is just, of course, an example. Car loans, mortgages, and credit card debt, all garbage. Okay, we're talking about the lowest of the low garbage. They take that, they put it into a little box, they put a bow on top, they label it, let's say, CDO, collateralized debt obligation, and then they get their friends in the rating agencies to rate it a AAA, quote, investment. And corporations all over the place are going to look for, of course, number one, AAA rated investments. They say these are safe, these are good investments with low risk. And we can pour our money into that and we can get returns from that. It is diversified because it's not just one car loan or from one company or from one city. It's car loans from all over the place. The same with the mortgages and the credit card debt. From all over the place. Therefore, it's diversified. It's spread out geographically and all sorts of different ways to diversify it. But what if you have a whole bunch of different look in a garbage can and you'll see all different things, right? You see different pieces of food and you see, paper and you see other things in there. Okay, you see what I'm going with that. It's all garbage. It's all in the garbage can. And this is the garbage can of financial assets, the financial industry. It's nothing but garbage. And I say that word over and over again, hopefully, so it sticks. This is what derivatives are. This is what we're gambling on today. And everything that's interconnected in with this, your pension funds, your retirement accounts, the value of your home, if you have any stocks and mutual funds and bonds and everything are all interconnected with this. And it's all going down. I spent quite a bit of time reading about bail-ins, particularly in Canada, but of course it applies to all G20 nations. And what I have found out was the most interesting part anyway, was right here. I want to mention it quickly. It's talking about Bill C-15. And this is very significant whether you're in the US, whether you're in Europe or anywhere. Number one, we saw what will happen with a bail-in. A bail-in will take money from depositors. Okay, we know that from Cyprus. But there has been a lot of talk when the initial introduction of the bail-in regime would be that they would not use depositors' accounts. Okay, that was the talk. However, in Bill C-15, there has been no specification for what is or is not included. The types of liabilities subject to the bail-in regime are not set out in Bill C-15. So we actually technically don't know what will be included. And you think that they're going to put something like that in the bill at this time? No, right before they need to implement it, they'll put it in, or they simply don't need to. They'll just go ahead and do it anyway. This is extremely significant because it's showing you the law itself. And that law allows them to do this so-called legally. And that's what people need to be worried about. See, they think that, when things starts to hit the fan, I'm going to pull my money out. I'm going to buy gold. It's going to go up to X number, and then I'm going to sell it. I'm going to live happily ever after. Well, it doesn't go like that. Markets shut down, there are bank holidays, there are distress, civil unrest, chaos, and there are problems that will exist that will leave you in trouble for at least a short period of time. So if you're not prepared now, how will you be prepared when the time comes? That's why it's very important to have your things in order before the so-called stuff hits the fan. Looking at this article out of Reuters, multinational companies should refrain from tax avoidance practices and pay their fair share. That's the head of the Eurozone finance minister said on a new endorsement of the European Union's fight against tax dodging. That's right. He's saying you know what? You have to pay for your taxes, okay? Or else you're in big trouble, mister. And this is really the unsettling part, is that they can't even get these corporations to pay their taxes, billions and billions of dollars in taxes, because ultimately, why? They're so interconnected with the governments. It should show you how everything is all really just one unified corporation. Let's call it that. The government is a corporation interconnected in with all the financial industries and all the other bigs that are out there. And what's silly about it is connected with this article. Facebook's UK business generated 11 million in tax credits last year, despite the world's largest social network making a profit of 6.19 billion. So they make 6 billion and they get a tax credit. Wouldn't that be nice? Wouldn't that be nice if that was you? That you could make a global profit of 6 billion and get a tax credit of 11 million. Sounds pretty good. Seems like they got some good accountants working there, and they will not have to pay taxes. They are so interconnected with the government, particularly in the US, getting all sorts of advantages. And of course, because they are really, in a way, part of the cyber arm of the US government. And they give up all the information to the US government. There is no hiding that. There's no denying that. And it shouldn't come at any surprise. Google's the exact same way. When these companies pay little to no taxes every single time, year over year, and then we point fingers at individuals who are making $250,000 a year, saying they're the rich, tax them heavily. I assure you that is not a good idea. And then you move on to this here, last but not least, as it's basically saying that individuals in the US have less than $1,000 in their savings. And I've seen statistics that are much, much worse than this. But what's happening now is that, they give the stats. I don't want to give them anyway. What I would say is that individuals are not going to save when they're not getting any returns from it. Why would they put their money in the banking system when they're going to get zero or perhaps negative? And that doesn't really give them an incentive. So they spend all their money, perhaps frivolously, or they'll put it into something that they believe is an asset. And a lot of times, like you saw that article about the collectibles I did just recently, where the value of them drops significantly. And that's the sort of thing that we're seeing a lot of, they're chasing profits, thinking that everything keeps going up and up and up, and then they lose out big time. So that's important to know. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon. They have a look inside feature, which will allow you to flip through the pages of the book and see if you like it. Take care.